Welcome back. You're watching Big Deal and we are discussing the electric vehicle sector and the deal dynamics there. Now, Amitabh, we were talking about the cell manufacturing. Of course, battery assembly is something that is becoming in-house for most of the EV players. Cell manufacturing, where the government had supported with some bit of subsidy, also exists, and many players are looking at that manufacturing as well. In terms of certainty of one of your largest raw material cell and supply chain disruption that we have seen, like in chip and semiconductor space, it can take place in the cell area as well. And on top of that, the cost efficiency. All this put together, how do you see this particular space, the R&D and cell manufacturing capability in India?
So cell manufacturing is extremely important. And I think given the government's PLI schemes that have been launched recently, I think it will see a lot of impetus. There are a lot of companies that have been selected for PLI, some permanently and some new ones that are coming on board. It's clear that cells do require a lot of infrastructure from an investment perspective, and there are different designs, cylindrical pouch, prismatics. Newer versions will also start coming out. There's no doubt that India doesn't have too much control over the supply chain as far as lithium is concerned. Lithium, cobalt, phosphate, those kinds of things are not available. So I do see a different kind of cell manufacturing also evolving in our country that could be related to raw materials that are readily available in India. Those could be around the metal ion batteries like sodium, aluminum, iron, air. There's a lot of development and work already that is ongoing in those areas. We do believe that that will have also a significant impact on both the supply chain availability as well as price and performance according to the needs of India.
Right, Amitabh. In fact, Srihari, let's focus on the two important cell chemistry compositions, two types, LFP and NMC. What is the differentiation in terms of cost economics as well as the energy density and its availability for India?
Yeah. So if you look at the two cell chemistries, which is LFP and NMC, I think if you look from an energy density perspective, NMCs have a higher energy density compared to LFP chemistries. You look at safety stability, LFP is more stable. So globally, the way things have moved around is typically China is largely LFP chemistry, whereas the Koreans are focused on NMC chemistry. When you look at the Indian context, India is largely, at least moving now, a lot of the OEMs are moving towards the LFP chemistry. When you look at the cost dynamics of each of these, if you focus on the LFP chemistry itself, roughly 30% of the LFP is largely related to a cathode active material. And when you double click on that cathode active material, which is one of the biggest components for LFP, what you'd end up seeing is 50% of that is roughly raw materials and 50% is roughly OPEX and margins. And lithium carbonate tends to be the largest cost in the raw material itself. So having control over your raw material becomes very, very critical. Now, in the Indian context, what we have seen is many of the OEMs and the cell manufacturers have partnered with global cell players. And what I believe is they will be piggybacking on their supply chain to get cost competitive on the carbonate pricing also. When you look at NMC, slightly different. The cathode active material in itself is roughly a significant portion compared to the cell itself, and nickel alone amounts to about 35–40% of the cost. And as we know, nickel is largely relegated to Indonesia, and that's why you've seen multiple investments going into Indonesia.
Yes.
What we expect to see is if companies are looking more towards performance and high-end vehicles, they would focus on NMC. But largely for the sectors that we are focused on is LFP chemistries. And I just also want to echo Amitabh's point that India will see a sort of uptake of sodium-ion batteries. There are multiple companies working in space, and that is the only way to basically build a resilient supply chain with materials that are readily available in India.
All right, so sourcing the key raw material is extremely important, and also the certainty of their biggest raw material or component, cell, is also critical. Sridhar, from the investor lens, how do you see the investment interest and funding of R&D as well as cell manufacturing? And what are the dynamics at play when you invest in an EV? What component of that is related to their cell manufacturing or availability capability?
Nisha, today almost all of the cells that are used in India, they are imported. There is practically no domestic manufacturing, certainly none at scale. There is a lot of battery assembly and BMS manufacturing capability that is being built in India. So today we are to a great extent dependent on Chinese cells. Several conglomerates as well as auto component manufacturers have announced big plans for cell manufacturing in India, and that will sort of become visible over the next 1 to 2 years. As an equity investor today, we still feel that the cell manufacturing ecosystem in India is still quite nascent. Either it belongs to large conglomerates who are investing there, or it belongs to startup companies where we are still a little hesitant to ride the technology capabilities of these companies. So we are in some form still quite dependent on these Chinese imports. But what's important is that when you look at the whole battery, cell is one part of it. There is the rest of the battery, which has the battery pack, the thermal management system, as well as the battery management system. And the composite of that is what goes into making the entire battery pack. While we're still dependent on imports for China, I think there is a fairly strong domestic ecosystem that is evolving in the pack assembly, thermal management, and BMS management in India.
Yes, that's right. Battery assembly is something that we have already got it in-house. Now it's the cell manufacturing that is the focus, as Sridhar was also mentioning. Srihari, when we talk about the government support, the subsidy, as well as the PLI benefits, both for electric vehicles as well as cell manufacturing, how do you rate it, especially with the reduction from FAME 2 to EMPS scheme?
Yeah, so I think we have to give a lot of credit to the government for the steadfastness in terms of supporting this sector. If you look at the time between 2015 to now, FAME 1 was about 60 million of outlay between 2015 to 2019. But when it came to FAME 2, roughly the outlay was about $1.2 billion, which sort of completed in March 2024. And also, government has this bridge between April to July, which is the EMPS. As we know, there is a reduction in subsidy, but very clearly, the FAME 2 achieved its success, particularly in the two-wheeler side of it. And we built scale. And obviously, the intention and the direction from the government is to send a message that potentially at some point in the future, subsidies may go away. And that's why there's a steady reduction. And I think OEMs have realize this, and every OEM in the market is building their products with the inherent assumption that subsidies will no longer be in play. And finally, government has very strongly supported on the cell manufacturing, roughly an outlay of $2.25 billion on ACC PLI phase 1. And also not to forget the support that government has given, roughly about $3.2 billion to the zero emission vehicle manufacturers as well as the component manufacturers. So all in very robust support from the government.
All right, so that adoption has been supported by the government. But Amitabh, final question to you, and I have just 1 minute, even though a lot more to discuss on this emerging sector. But Amitabh, do you think subsidy going away is a pressure on the manufacturers? And second, what are the suggestions for the government for more support?
Absolutely. I think it is a pressure, but I think it will separate the men from the boys. It's clear that EV manufacturers also need to focus on profitability. And the only way to do that is to have control over your engineering, over your processes, over your design and R&D capabilities. I think government has been a big support. EVs would not have been where they are today without the government support. What I would like is that, most of the EV component manufacturers are MSMEs. It's important to also include them as part as part of the PLI scheme. Otherwise, there will constantly be this differentiation. Keep a long-term plan, a perspective rather than short-term, things that could be floated out. It helps the industry because these are, long lead items. And hence it always helps if you know what things are going to happen in the future.
That's right. The certainty is one of the most important things for an investor so that they can bake in their estimated returns. So that's one thing that is clear. But yeah, a lot more from the government side as well as from the entrepreneurs. But thank you so much, all of you, for giving a deep dive understanding in this emerging sector, which is going to make it to the public market very soon. Sridhar, Srihari, Amitabh, thanks so much for joining us. And thanks to all the viewers for tuning in. Thanks so much.